When I hear the word resilience, I think of how you respond to risks in the ecosystem in which you operate. That applies whether it's your personal life, your family life, your business, your company, and so forth. So when I think about it from a banking point of view, obviously from a trade point of view, there's a lot of new risks that have come about with new trading alliances, the risks associated with tariffs, what that can do to disrupt supply chains. From a payments point of view, you've got a lot of innovation. You've got new payment systems that are emerging in different regions. You have efforts to try to connect different payment systems, advanced technologies. So there's a lot of disruption. And I think the real key from our bank's point of view is how they anticipate those risks, how well they understand where their own vulnerabilities are within their ecosystem, and then how they respond to them, and how quickly they're able to respond to them. I think the most promising, which is a little transparent perhaps to some people, is that there has been some progress from a legal framework standpoint. There are a few more countries that have adopted the Melita framework, which will underpin the legal standing of digital trade. So that's number one. And I think that's what's major is it's happened in some G7 jurisdictions. So that's progress. I think there's also been progress from a standards point of view, and the ICC DSI has done a lot of work to document the key trade documents and the data elements. So that's really important from an interoperability standpoint and a cross-segment standpoint. So there's progress been made there. I think the technology has already been there to some degree, waiting for the other pieces to catch up. So I think a lot of the building blocks for digital trade are there. From my perspective, one of the biggest challenges is still demonstrating to corporate clients of the banks, what's the value proposition? Where do they find the benefits for their investment? And then how do they prioritize those investments in the tools they need relative to other investments that they have to make? I think that's going to take a little bit more time for us to prove. Now, one of the risks I'm seeing with digital trade is the same types of risks that we're seeing with payments, which is fraud. Because if the good actors in trade are also digitizing, so are the not so good actors in trade. And so it raises challenges from a fraud point of view. You know, how do you ensure that if there are digital documents that are produced, that your systems are secure enough? Which systems are reliable? These are new risks that I think our members have to also try to sort through. With ISO 20022, the first thing we did was we talked to the early adopters or the early migrators, and then we got the lessons that they learned from their migration process. We dropped it into a guide, for lack of a better word, so that the banks that were coming behind them could get the benefit of the lessons that they learned. So that was the first of what we're having as a series of 3 papers. The second was really a best practices guide around governance, around data, around testing, around all the elements you have to go through. So that's been helpful for the ones who needed to understand what works and where there's still challenges. The third piece that we're working on now is really looking at the compliance aspects of ISO 20022. So look, I can't take credit for the success stories of the banks that have done this successfully, but we're trying to help ease the pain and help the community learn from the ones who have already been through this. Now, I think there's some other interesting things going on in the payments world that we've been involved in, not the least of which is really the changes in regulation, the connectivity of faster payment systems across different jurisdictions, some of the risks that arise associated with trying to connect disparate systems with disparate regulatory regimes, disparate qualification schemes, and so forth. So we've been engaged with policymakers to try to address some of those imbalances, if you will, and to hopefully take some of the risks and the friction associated with regulating these cross-border systems. That's going to be a process, but so far we've actually gotten pretty good reception from the policymakers we've talked to. I think correspondent banking is always facing one of the most consistent challenges, which is connectivity across a broadening ecosystem, right? And it's a never-ending challenge because you have new companies that come up in new jurisdictions that still need connectivity to other counterparts that they've never dealt with. And that's the whole purpose of correspondent banking. The question is, for the banks that have traditionally been doing correspondent banking, can they provide the connectivity for those new entrants to the ecosystem? Can they provide the connectivity to the counterparts that may be in a completely different jurisdiction? Now you add to that changing trade lanes. So if I have a client base that has typically been doing most of their business in one region, now they're entering another region, does my network facilitate that connectivity? Those are consistent challenges. That brings us back to the age-old issues of KYC, of comfort level, of risks with certain types of companies, whether they be small and medium-sized companies or micro companies. What's your risk tolerance for certain markets and things like that? That's a consistent challenge for all of our members. And I think the more payments change, the more trade changes, having that connectivity to all parts of the globe, whoever can do that best, they're the ones who are going to see the rewards.